Here you go, MMT. I'm in that first 3-minute print on the Dow Jones, down 143.57. Every bull rally must come down, as I've always said. We had a 2 to 4 week cycle that we had put out our warnings with our MMTs. We got a calendar earnings starting out on this opening bell. We got everything rolling. And that right there is your gap open down, right here. All right, now at lower levels, you will have bull support levels that will come in. That price channel level, the price channel level will come in. Okay, so that's that opening bell print on that left elbow gap down that we look at where stocks get made within this very moment live here and now with the MMTs as they take their opportunity to see that beautiful $3 bounce right here. That's a left elbow bounce on Google. You got a left elbow bounce on Apple. Yes, you do. From 625.30, and it all happened in 4 minutes, ringing that cash register, selling in to where they would buy that dip on that opening bell. And how the left elbow gap down would work, and then you would sell into the resistance, selling now into the highs and being done with that. Scaling out a half of the position at a minimum on Apple. All right, MMTs in this group, you watch that left elbow move, and you can see that $4 hook. They report earnings on Thursday. They wanted to buy that dip. That 632 to 625.29, that's called the left elbow, $5 entry, called burn rate, called left elbow, gap down. And SMF will show you. Here we go right now on that 635 put. The high was 25.20 on the opening bell, hitting 21.40 and bouncing like a rocket as we came running off the bottom on that Google trade. Oh, yes, there it is right here. Here's exactly what the 3-minute chart looks like. They left elbow gapped it down. They gapped it right here, and we're selling short right back down. And that premium right here on that put option right now on that weekly 7-minute opening bell is printing $2 profit, 23.60 by 24. Now, how do I get out? Remember, everyone bought at the highs up here. That was earlier prints. They all bought the highs. And only a few people bought the lows. And that's us, because that's the side of the market that they took it up and they hit it and they reversed it. That's all within 8 minutes of the opening bell. And how shorting the high up here, they brought it right back above the close as they did, and now it's going to come right back down and break those lows, and that all happened in 8 minutes on Google on the opening bell. Google alert, opening bell. 9-minute opening bell, famous left elbow gap down with the 17 expansion times 70 pennies. 7 times 7 is 49, $4.90 move off of that bottom. And how to trade the left elbow gap down on an opening bell on a stock like Apple, and how it's coming right back over here in our platform in this opening bell where the breakout diamond started. That's going to be the resistance now. And this is all done on a super left elbow gap down to those lows. Yes. And right now, it's strong from those lows, and that's called, well, how do I get the entry? You got to get it right away. You can't let it go by. And how do you do that? When everything changed in here from week, it was minus 74. 3/4 delta, negative delta, which is minus $8.38 on that opening bell. Yes, yes, yes. And there's $4 profit right now because you're minus 0.35, $4. Look at that. Look at that. Look at that, MMT. Look at that. Look at that strength of that left elbow in 10 minutes on the opening bell. How do I buy them? As I said in pre-market, the opportunity. They're royal and they're golden opportunities, and you must execute them on them left elbows. When that IR changed, it went minus 0.74, 11.91 teenies, minus $8.38. And that's how you trade the negative ratio. The current one right now is falling weak up here. Why? That's how you read your info panel MMT. But over here, look at that diamond, double diamond, double diamond, double diamond, double diamond reversal, double diamond to the breakout side over here the other day, to the left elbow, to the entry, to the exit, to the exit. And how do I exit? What does it look like? That resistance level must be sold every single time. Apple on the left elbow and Google left elbow bid pop right up here. Here it is, 633.70, now printing all the way back down to break those lows, and that's called price action volatility. And how do I trade that first 15-minute opening bell on these two names? This is how you do it. Please get with us today. Come and see it live for yourself. Come and knock on our door. We'll open it up to you. We'll show you. And we'll show you how to burn that thing from 625 on the opening bell to 633 to that reversal right back down. And that's, oh yes. Now, let's take a look at the brain. See, you were minus 0.89 on the bottom. That was negative 14.31 teenies, minus $7.03. And then that great left elbow trade off of that bottom. And guess what? You actually were positive 0.10.18, 2.81 teenies at $1.38 positive on that opening bell from that left elbow. How do I trade the first 15 minutes of that opening bell and bank huge profits within the equity and the calls and the puts, the options as well, and how they'll firm up and how price volatility will increase, and the earnings season is upon us. And once again, we're proud to announce that left elbow entry and exit, what they're like and how they consolidate. Let it be known that the left elbow reverses immediately and you sell right into the resistance. But when you're selling out of the long position and selling short at the same time. So this way you capture that whole movement in that first 15-minute opening bell, 6:43 a.m. Pacific Standard Time, Google Apple update earnings season 4/9/2012. Well, use this because we doing these trades right now, Speaker 1 and Speaker 2 and MMTs. The thing about the left elbow is that entry. And then you have to be selling into resistance. That's how you trade that first 15 minutes of the opening bell. Then we'll look at the next 45 minutes for the hourly opening bell. Each one of these are exclusive, premier, because they're live in the marketplace. There is no delay, no should have, would have, could have. It's all about the accuracy. It's all about the mechanics of the left elbow entry and exit, and then selling short when it gets weak. Just like Google over here. Right now, take a look at it. See the print, 627.89, 29 penny spread. Look at here. You're above 25. You're a half a delta. So you worked off the negative 8.9. You're at 5.6. Here's your prices. This is all done on that Google. And I can tell you right now, they shorted that top. They walked that up there. The normal people would not know, well, how do I get that? And then how do I sell that? Well, it's okay. We'll show you how to trade the opening bell. 15-minute time clock.